Welcome to the deep dive. Today we are really zeroing in on the Malaysian stock market, but we're looking super close.
Yeah, really granular.
Exactly. We've got these notes covering just a few hours, the closing session on June 3rd, 2025, right after the market shut,
hmm
and then bam, the opening session the very next morning, June 4th.
That close to open comparison, it's, often quite revealing.
That's the mission here. Take these reports, these little snapshots, and go beyond just the headline numbers.
Right.
We want to understand those subtle shifts, maybe the underlying forces,
Yeah.
what actually changed overnight. What's the story these few hours tell us?
And looking at market data like this, I mean, session by session, comparing a close to the very next open, it's really crucial if you want to catch those short-term dynamics.
How so?
Well, it's where you can spot momentum shifts,
Yeah.
right? See how overnight news, maybe global stuff or regional sentiment, actually translates into like real trading behavior. And maybe most importantly, it shows who's really active, who's influencing prices right at that moment. So we're going to pull out the key details from these notes and unpack them for you.
All right, let's dive into June 3rd afternoon then. Reading these notes, you really get a sense the mood was, well, heavy, wasn't it? Kind of a palpable fatigue.
Absolutely. The notes definitely capture that feeling. The main index, the FBM KLCI.
The benchmark.
Yeah, the benchmark. It closed lower, down 5.1 points, ending at 1303.25. That's a drop of 0.34%.
But it held 1500, right? The notes mentioned that.
It did, yeah. It managed to cling on to that psychological level, 1500.
Yeah.
But the technical picture, according to the analysis in these notes, was showing strain, signs of, technical fatigue, weakness under the surface.
And it wasn't just the big guys dragging things down. The notes are clear. This weakness was much broader.
Oh, yeah. Definitely broader.
We're talking FBM 70, the FBM SCAP for mid-caps, and the FBM ACE, the Growth Market Index, all down.
And the ACE market took a particularly big hit, didn't it?
It did, down 1.52%. That tells you the caution wasn't just with the blue chips. It was hitting those smaller, maybe higher growth companies even harder.
Yes, that breadth of the decline is a really key takeaway from the June 3rd notes. Across the sectors, I mean, it was pretty stark. Over 10 of the 17 main sectors were in the red.
Which one stood out?
The notes specifically call out technology, down 1.43%. Industrial products and services, that fell 1.68%. Healthcare was lower by 1.09%. And energy dropped 1.28%.
So not minor dips, pretty widespread selling or caution.
Exactly. Noticeable moves reflecting a defensive stance or maybe just outright selling pressure.
So what was driving all this pressure on the third? What did the sources point to?
Well, what really leaps out from the notes, the absolute biggest factor highlighted for that day was money flow, specifically foreign money flow.
The foreign funds.
Yeah. The notes state a net foreign sell of RM 457 million, just staggering.
Wow. RM 457 million net sell in one day.
In one day. Nearly $500 million ringgit pulled out.
Yeah.
And, context is key here.
How so? Was it unusual?
Well, the notes emphasize it wasn't just a one-off thing. This was the 5th consecutive session where foreign investors were net sellers.
5 days straight of selling.
5 days straight. That trend is critical. It suggests a sustained withdrawal, not just, a temporary adjustment.
Okay, so foreigners selling heavily. How did the local players react? Did they step in?
They did try, according to the notes. Local institutions, they were net buyers. They put in RM 413 million.
Okay, substantial.
And local retail investors also added a bit, RM 44 million net buy. So you had local money trying to absorb that foreign selling.
But clearly, given the market went down, it wasn't quite enough.
Exactly. The sheer volume of that foreign selling just overwhelmed the local buying effort on the day. And there's another crucial data point in the notes that really highlights this dominance.
What's that?
The foreign transaction participation rate. On June 3rd, it was incredibly high, came in at 67.7%.
67.7% foreign participation. What exactly does that tell us? Why is that number important?
Great question. It's a key metric. Basically, it tells you what percentage of the total trading value on the exchange that day involved foreign investors buying or selling.
Okay, so their slice of the action.
Precisely. And when that number is really high, like nearly 68%, it means their decisions, their order flow,
Yeah.
heavily influenced the market's direction and volatility that day. They weren't just participating, they were, kind of dominating the trading landscape.
Got it. And adding to the pressure, the notes also mentioned the ringgit weakening.
Yes, that was another factor noted for the third. The ringgit lost ground against major currencies. Specifically mentioned was the US dollar, moving to 4.2475.
Okay.
and against the Singapore dollar, hitting 3.299. The notes sort of connect this, pointing out a weaker ringgit could potentially bump up import costs.
Right, potential pressure there. But it's interesting, the notes also contrast this weakness in Malaysia with what was happening elsewhere,
They
right?
did. While Malaysia was struggling, the external picture, according to these notes, had some brighter spots. U.S. futures were mostly adjusting upwards. And importantly, major regional markets like China and Hong Kong showed real strength. The Hang Seng was up, 1.53%.
Solid.
And the Shanghai Composite saw a really substantial gain, 4.03%. This regional difference is noteworthy. It suggests money wasn't necessarily fleeing all emerging markets,
Right.
but maybe moving within the region, perhaps away from Malaysia towards places perceived as stronger, at least on that particular day.
So let's sum up June 3rd from these notes. It sounds like a pretty clear picture. Heavy foreign outflow, driving things, creating this sort of vicious cycle, low sentiment, index pressure.
Yeah, that captures it well.
And the notes ended that day highlighting things to watch for, signals of a potential change.
Exactly. Signs of foreign money actually returning, a big step up in local institutional buying, or maybe some kind of government stimulus. Those are the key watch points mentioned.
And there's also a bit in the notes about different investor approaches.
Yes, a perspective for different time horizons. For short-term traders, the advice was basically caution. Maybe look at defensive sectors like REITs.
Real estate investment trust.
Right, for dividends. Or telcos, telecommunication firms,
Yeah.
often seen as safer. But for the patient, long-term investor,
Yes.
the notes offered this interesting thought. Maybe this weakness, this low point, could potentially germinate seeds of opportunity. A reminder that pessimism often marks the bottom.
Okay, so that's the scene closing out June 3rd. Now, this is where it gets really interesting. Let's unpack the very next morning, June 4th. The opening session notes. Did things just keep sliding?
That's the crucial question these notes help answer. Looking at the open on June 4th, well, it started cautiously. The index did dip slightly, down just 0.92 points to 1502.33, a tiny 0.06% decline, so no big rebound at the open.
Okay, still down slightly. But the notes suggest a key difference despite that small dip, right? Something felt different.
Absolutely. The notes really highlight this. While the index was technically lower, the intensity of the selling pressure seemed to be easing quite a bit. Compared to the relentless selling on the 3rd, it felt less severe. The market opened soft, yes, but the force pushing it down felt weaker.
And we saw a definite shift in which sectors were getting attention that morning.
This is where the notes really show that change in investor thinking, maybe overnight. On June 4th morning, construction stocks actually rose 0.62%. Utilities climbed 0.40%.
Construction and utilities. Why are those significant? What does that suggest?
Well, the notes interpret this rise as investors potentially rotating into more defensive assets.
Ah, defensive. Why are those scenes defensive?
Good point. Utilities like power and water have pretty steady demand, right? Essential services, less tied to the economic ups and downs. Construction can sometimes act defensively too, especially if there's anticipation of, say, big infrastructure projects backed by the government.
Okay, predictable work pipelines.
Exactly. So seeing them rise after a day of broad weakness suggests a deliberate shift towards perceived safety, towards stability. It lines up with that defensive strategy mentioned in the June 3rd notes.
Okay, a move towards safety. What about other sectors? Any recovery in those hit hard the day before?
Well, energy saw a small gain too, 0.25% in the morning. The notes maybe link that to crude oil price moves. And interestingly, technology...
Certainly got hit hard on the 3rd.
Right. It showed a slight improvement on the 4th morning, up 0.16%. The notes suggest this might be mirroring overnight strength in U.S. tech. They specifically mentioned the PHLX semiconductor index doing well.
The PHLX semiconductor index. What is that exactly?
It's a global benchmark, basically tracks major semiconductor companies, the chip makers and designers, kind of a bellwether for global tech hardware.
Gotcha.
And the notes mention it surged over 2.7% overnight. So that strong performance could have provided a little positive sentiment spillover for Malaysian tech names at the open, even if buyers weren't exactly rushing back in yet.
Right, okay. So some subtle shifts in sector leadership. But let's get back to the crucial part. Money flow. Morning of June 4th. Did the foreign selling stop?
No, it didn't stop completely. The notes show foreign investors did continue their retreat. There was a net outflow of RM 121 million in that morning session.
Okay, so outflow continued, making it the 6th day.
Exactly. The 6th straight session of foreign net selling. So that underlying trend of withdrawal was definitely still there.
But wait, RM 121 million? Compared to RM 457 million the day before, that sounds like a big drop in the amount of selling, even if the direction was the same.
Absolutely. And that's a critical distinction the notes draw out. Yes, it was day 6 of selling, but the volume of selling was substantially lower in that morning session. RM 121 million is still outflow, no doubt, but is less than a third of the previous day's total figure, a significant slowdown.
Okay, that's a key difference. And what about the local players on the fourth morning?
This is where the notes show the most significant shift, I think. Local institutions really stepped up their buying. They injected a pretty robust RM 94 million net buy in the morning.
94 million from institutions. And retail.
Retail investors also continued adding positions, net buying RM 28 million.
Okay, so local buying stayed quite strong, while foreign selling really eased off in volume.
Exactly. And the story gets even more interesting when you look at that participation rate again. Remember how high foreign participation was on June 3rd? Almost 68%.
Yeah, indicating they were really driving things.
Well, on June 4th morning, according to these notes, foreign participation fell dramatically, down to just 48%.
Wow, from nearly 68% down to 48%. That's a huge drop overnight. What does that plunge signal?
This is a really key insight from the notes for that morning. It signals a major shift in who is actively driving the bus, so to speak. Who is influencing the trading activity?
Right.
When foreign participation drops that much, their influence on the market's moment-to-moment price moves and direction is significantly reduced. The notes suggest this lower foreign participation, combined with that continued strong local buying.
Yeah.
It indicates that local participants were sort of regaining short-term control of the market dynamics at the open on the 4th.
Regaining control. What's the implication of that? More stability, maybe.
That's what the notes suggest, yes. This higher level of local buying and participation could potentially provide some near-term stability. If locals are stepping in more assertively to absorb or counter the remaining foreign selling, it can help put a bit of a floor under prices, especially, if the broader regional sentiment stays positive, like the notes indicated.
And what about the ringgit? Was it still weakening on the fourth morning?
Another point of contrast noted was the ringgit stability on the 4th morning. The USD-MYR rate was hovering around 4.25, pretty steady compared to the depreciation noted the day before.
So less currency pressure.
Exactly. The notes highlighted the stability suggests less immediate pressure from exchange rate moves on things like import costs, at least in that specific morning session.
Okay, let's pull this all together then. Comparing the June 3rd afternoon close notes with the June 4th morning open notes. What's the big picture takeaway about the market's dynamics?
It's really a fascinating study in subtle shifts happening within a continuing trend. The headline trend was still negative, right? 6th day of foreign selling.
Yeah.
But the session-level data from these notes reveals a significant change in the character of the market between that close and the next open.
Yeah, like you said, the selling didn't stop, but the rate of selling slowed way down. From that huge RM 457 million net outflow on the 3rd to RM 121 million in the morning session on the 4th. That's a massive difference in pressure.
A huge difference in pace, exactly. And tied to that was the clear sector rotation the notes highlighted. Money moving into defensive plays like construction and utilities. That signals caution, sure, but also a specific kind of investor positioning starting to emerge.
And for me, that shift in foreign influence seems massive. Still selling, yes, but their participation dropping from nearly 68% down to 48%. That means even while they were selling, their overall weight, their impact on trading volume, was much less.
Precisely, which allowed local players to step up more effectively.
Yeah, the notes showed local institutions and retail collectively buying more actively relative to the foreign selling. It feels like they took back some of that short-term market control that the foreign flows dominated the day before.
That's exactly the dynamic the notes describe.
And the ringgit being stable provided a slightly calmer backdrop too, compared to the previous day's slide.
Yes, the notes kind of weave these threads together, this slower foreign selling, the increased local counterbuying, the sharply lower foreign trading influence, plus the currency stability, all happening while global markets were generally positive. It paints a picture.
What kind of picture?
A picture of a market that, yeah, was still under that foreign selling pressure trend, but was finding some internal balance. It was showing signs of shifting dynamics right at the start of trading on the 4th. So the core insight, I think, from really digging into these specific session notes is just how vital it is to look beyond the headline numbers, like beyond just total daily foreign outflow.
Right.
You have to examine the underlying mechanics. Even inside a persistent negative trend, like 6 days of foreign selling, this close-up view reveals these really nuanced shifts. The pace changes, investors rotate, and critically, that balance of power, who's actually dominating the trading activity, can swing pretty fast.
It really hammers home that the index number is just the surface layer, isn't it? The real story, the shifts that might give you clues about what's next, are buried in these details, session by session, money flow, and sentiment.
Absolutely. It shows you how that subtle dance between foreign and local players, mixed with external factors and how investors are positioning themselves. That's what shapes the market's daily reality, much more than just a single closing number can tell you.
Exactly. And thinking back to those initial notes about watching for signals of change, like foreign money returning, sustained local buying, maybe government action.
Yeah.
Well, the morning of the 4th, even though it was the 6th day of foreign selling, it did show these subtle shifts. Changes in who was trading and what was being bought. What could these little changes hint at for the next few days?
That's the big question, isn't it?
Will that slower foreign selling continue? Could it even pause or reverse? Will local institutions keep up that strong buying and maintain their higher influence? Might these shifts be reacting to something or maybe preempting something like potential government action?
It leaves you with an important question to think about. How do these seemingly small day-to-day, session-by-session changes in money flow and sector choices actually fit into the bigger picture of market cycles? Are these subtle shifts the very first tiny signs of those seeds of opportunity starting to sprout for that patient investor the notes mentioned? Or is it just a temporary breather in a longer downtrend? Something for you to ponder. Keep exploring the data. We'll be back with more deep dives soon.